Hey everybody, Jake here with TrendSpider to go over the weekend video. This weekend we're going to go over the broad markets and go over a couple interesting setups into next week based on the volume profile and a few other variables. So going into SPY as we always do first. First thing I want to show you guys is this is why the auto trends is so important on TrendSpider. I didn't even see this trend line honestly, and then I just randomly turned on auto trends and this was one of the ones that popped up. Notice here that we've got another line here that's showing us that we're kind of breaking out of this symmetrical triangle here right at this point of control, showing that most of the volume is holding here. So as supply dries up and demand either stays the same or increases, you're generally going to get a bounce just because that's how the supply and demand curve works. So SPY, we've got that little bounce here. We've got this area which was previously previous supply. Remember, when we were looking at the chart back in the day here in the 250s, this was our target above. This was where all of the supply was previously holding from averaging down too quickly. And so naturally, as these people break even, you have kind of a friction zone between buyers and sellers trying to figure out if the price wants to break out, break down. And so in this case, we can see that it looks like supply is starting to dry up here, and we do have that peekaboo candle here through this resistance trend line. This chart got a little bit of I don't even know the word, just some people got some comments. Let's put it that way. This chart got some comments, and it's not meant to be anything other than a statistical chart showing, I just said chart, sorry about that, chart showing that, you know, in 2018 we had this huge drop. Here obviously we have this huge drop. We've clearly hit some type of short-term bottom just shown by this recent rally, very similar to 2018. So all I'm showing here is I'm showing that after this candle bottomed, which is number one, and then obviously it's number one here, we are at the number 5 candle. And notice how similar these two number 5 candles look. I'm not saying that, you know, next week this thing's going to blast to the upside, but it is important to realize that, you know, some of these sectors and you know, ETFs like IWM are starting to show strength. So, you know, you want to look for those leaders versus the laggards. You know, you want to look for strength in other parts of the market other than just, you know, the broad markets. And so this one is starting to show a little strength. Obviously anything can happen, but if we do get bearish here, we're really going to have to drop through a lot of volume here, which is now our demand zone, because this volume is now below, or excuse me, the price is now above the volume which is below right here, meaning that there are people holding in the profits right now, which generally means as, you know, more people start to get a profit, they'll want to sell. But right now, everyone's pretty much break even. I mean, when I say people are in the profits, I mean, like, let's say we rip to this next supply zone, then people may start saying, okay, I'm up, you know, 7% a week, I'm getting out or something. But for now, we're pretty much in this status quo zone where, you know, we've been pretty much just ping-ponging back and forth over the last 2 weeks at this zone. So something's going to have to give here shortly. So going into the Qs, we've got a pretty similar situation here, but notice that we've got this diamond top that generally, you know, I look at a diamond top most of the time as bearish, but in this case, we can see that we're getting, you know, this little pop above the resistance line here in the diamond. And so same thing, we've got a ton of volume holding in this zone. So it's one of those things where has supply dried up, have enough people sold that we're going to sell, and then, you know, either demand remains constant or supply or supply goes down, demand remains constant, that would keep have the price go up, or supply even can stay the same, but if we have some good news or something next week that brings in demand and then that outpaces supply, you're obviously going to get a move up as well. So we are kind of in a area where technicals are likely going to cause the market to make some type of move here, and then the news event is just that trigger for the technicals. So that is the Qs. Notice that we've got a very similar setup on the weekly here. 1 2 3 4 5, 1 2 3 4 5. Clearly these were 4 hollow candles here. We did have a candle here that was red, but for the most part these look very similar. And I'm not saying that, patterns are going to repeat exactly to the T, but they do a lot of the time have very similar moves. So if that's the case, keep in mind the next candle was this big one here. We did gap below that close. So just because if we opened next week and dropped, notice that's what happened in this candle too before an absolute rip to the upside. So the market is so volatile right now. Just because you get a move down does not mean that we're back into sell-off mode. I mean, this whole sell-off was caused not only by panic, but there was a lot of forced selling there. So there is no more forced selling. There's no more margin calls. Maybe there will be. But for now, the market is somewhat stable, relatively speaking, to what we were dealing with a month and a half ago. So I'm going into some of those leaders or some of the ones that look stronger into next week that you didn't necessarily see on the weekly chart for SPY or the Qs. This is IWM. You guys can see here that it's clearly trading, literally bouncing back and forth between the Alpha Trends anchored VWAP anchored from February 20th and then anchored from April 3rd. So you can see here, this is going to be a very important area to break through if we do. If we go to the weekly chart, I want to show you guys a way to use the volume profile, which is kind of cool. So one, let's turn on the gap snake. We can clearly see there's a gap above here. Two, I want to start the volume profile or the volume by price from when these trend lines start. So I started the trend line here. I made another trend line here simply just to make it kind of parallel lines because at the end of the day, one trend line does not rule them all. You most of the time have to have a zone rather than just one precise line, and that's what we've drawn here. So since this point in time when these support lines started, you can see from 2017 most of the volume is holding above. So as we've seen in previous case studies, especially Disney a few months ago, this was a really cool case study on Disney, you had all of this volume above, you've got most of the supply holding above, so as soon as people stop selling, this is going to act as a magnet for the price above because that is where a majority of people are break even. So if those people just say, all right, I'm not selling, I'm just going to hold, I think we're at least going to fill the gap, maybe get back to my break even, that dries up the supply because remember, these are the people that are going to have to sell at a loss in order to add to the supply on the market. So if they don't sell, that's going to dry up the supply, and then all of a sudden you've got possibly an absolute rocket ship to the upside here. So this is a relatively strong candle compared to, let's say, SPY and the Qs, but we have no idea what's going to happen next week. These are just levels of interest to make sure you watch, and everyone's going to have their own levels of interest. These are just, particular features that I like to use on the platform. There are not hundreds, but there are a lot of different ways. I guess there are hundreds of ways you can use the platform. I mean, there are so many different things that you can combine that you can really create any strategy you want on this platform and you can put it to work. You can back test it. So that is what I wanted to mention about the anchored volume by price and the Alpha Trends anchored VWAP. Another one that I want to go over as far as kind of leading the pack is XBI. I mean, look at XBI. We looked at this a couple weeks back. What we were looking at was we were looking at the confluence between these two trend lines here. And what you can see is what happened. We had an absolutely epic bounce off this confluence of support, which was this previous support line here and then this double bottom support. And I mean, talk about a rip and a half. I mean, that is literally the definition of a V. I mean, right back up to where it started. I mean, that's pretty nuts. So if we turn on the volume profile here on the daily chart, you'll see if we start the volume profile from this reversal point on February 19th, which was pretty much the top in the markets before the reversal, you can see that since this point in time, most of the volume is holding here. So this is going to create a base, which it already has, for the price to move up. So, this is kind of, I want to say, if we're looking at SPY, you're pretty much like right here with SPY. And so you can see how much SPY is lagging XBI here. So, will it catch up? Will it not? We have no idea, but or nobody has an idea really. But we'll have to see what happens next week. Nice cup and handle formation before that breakout, just absolute rip. So that is the broad markets. Wanted to show you guys a few different ones because there is a few different things going on in the markets. It's not just SPY and the Qs. You got to look at the other sectors as well. And XBI and IWM were showing some strength. So going into the next case study here, I know we talked about CHK last week, and I wanted to kind of give my reasoning for why I did not take my loss here. And remember, we're not advisors. We do trade personally and use the platform. So I'm simply speaking on my personal trades here. But I want to show you guys the reason why I did not sell CHK. Last week we talked about CHK. It had just had this huge reverse split. We had this massive gap down and just continuation here. And the crazy thing about this is I did not sell at the loss, which was like 45%, absolutely brutal. One of the worst drawdowns I've had to deal with in a long time, not talking about options, just common stock. But the reason why I did not sell was because if we go to the 65-minute chart, remember what we were looking at last week. We were looking at this divergence that was forming, and it never broke down. You had the divergence still holding position, and this divergence is simply just the downward sloping price and then your upward sloping Williams percent range. Notice that it's negative 100 here, it's negative 99.51 here, and it's negative 99.82. So these points are higher than this point here, and that's why we had the divergence. It was so subtle. You had to literally look at the values up here to see if it was actually divergence, because it was hard to visually see if it was divergence. But if we go to the daily, you'll see that it was pretty similar here. We had this daily divergence. Notice that we never did hit a lower low here. We hit a higher low on the weekly percent range, and I call it the weekly percent range. Excuse me, this is the 3 week, sorry, not the 5. So every 5 days is a week in the trading world. So you've got, the 5 input would be your weekly percent range. The 15 is your 3 week percent range. I use pretty much 5 to 15. Sometimes you have to optimize it a little bit to see, depending on what stock you're on, because they all act differently. But this was a really cool example of being able to see that since this big breakdown in February, we talked about this last week as well. Look at how much volume was holding here. That we know that everybody capitulated here because we got the most volume that was, over the last 60 days here. It all happened within 2 or 3 days, and we know that because there's only 2 or 3 candles, or there's 1, 2, 3, 4, 5 candles down here. But at the time when we did this video last week, these volume bars were already there, so we knew people had already capitulated. So this is another thing that kept me in the trade. CHK was a tough one. I thought I was a genius selling up here in the gap fill in the 2250 zone, and then this thing's at 40 now. So that was just one of those ones where, unbelievable rip. It literally went up 194% in 4 days. Unbelievable moves. So congrats if you guys caught that. This wasn't like a trade idea or anything. I just wanted to show you guys kind of my thesis and why I stayed in, why I kind of took the trade initially. Remember, it was a reverse split. They had a 200-to-1 reverse split. That dried up a lot of the float, so that kind of set the stage for a reversal in general. And then when you had oil companies not going down anymore with oil, that was kind of the nail in the coffin to say, okay, something's up. It looks like we're going to get a short squeeze here, and that was fascinating to watch. So going into next week, we've got an interesting setup on TLRY, right? We've got this huge demand zone. So pretty much what I did, I started the volume by price from this February 20th top. You can also start it from here. Depending on where you want to start it. Brian Shannon of Alpha Trends kind of taught me how to anchor, whether that's the VWAP or the volume by price. And generally, you want to do that at the reversal. So whether you define the reversal as this candle here, which had the highest intraday, or if you consider that here, which had the highest close out of the 2 candles. It doesn't really matter. You can see as I move these, you're not really going to see much volume change here. So regardless, from these 2 points, we know that most of the volume was accumulating right in this area, and the price was getting really tight. The anchored VWAP was pretty much flattening, and then you have this big spaceship impulse candle that comes out on Friday. Now, this is where the leaders and the laggards come in, right? TLRY was up 21% on Friday. If we go to CGC and we look at the anchored VWAP from the same points, you'll see something very interesting. You'll notice that we anchor it from a little bit of a different point here because CGC had its earnings, which was the status quo change here. This was this big gap up. And so what you can see here is we have not broken through that anchored VWAP yet. So this is one that I'm looking at as a laggard into next week. I saw this midday on Friday, and I saw TLRY, and I'm like, I cannot not take this trade. So I entered the calls for May 15th for 15 bucks. And that's just me personally, right? I'm just telling you guys the trades that I took. That does not mean go and take that trade. That's just telling you guys, you know, my personal strategy and how I'm using the platform in making these trades. So that's what I got in. I simply took the trade because we have not broken through this anchored VWAP yet like we did TLRY. So I'm thinking this is going to be a laggard play that needs to catch up. This has been the theme of the market pretty much the entire time, right? You got these laggard plays that need to catch up. We saw that in NVIDIA compared to like Netflix and Amazon. Literally, let's go to Amazon. So Amazon was our leader here. This is, let me just delete all this. So this is the chart that we were looking at before. And so what you can see here is a couple things, right? You can see that we had this really strong cup and handle here, or cup and handle, sorry, inverse head and shoulders. And so you got that 1, 2, 3. And so Amazon was 100% the leader here. So you can see Amazon broke out through this kind of shoulder line here on April 6th. If we go to NVIDIA and we look at when NVIDIA pretty much had the same exact setup, when did it break out? Notice it broke out on April 14th. So this was lagging. Amazon, and you could have literally just played this because it had not made its move yet. Netflix had the same kind of thing. So this has been a theme across the board for quite some time. GE is one that's interesting into next week simply because you've got that same type of setup here. We can see anybody who has bought since this February 12th high, most of the shares are holding below. GE has an ER on Wednesday. So naturally, I'm thinking somebody who wants some cheap shares is going to try to blow this thing down to the 580s, try to break through this symmetrical triangle. Boeing has already done it, and Boeing and GE have pretty much been trading in lockstep. So it wouldn't shock me. But the thing that's really interesting here is that divergence, right? We've got this this positive divergence still holding. Never a fan of when the candle opens and closes within the previous candle's wick. So that's something that's unbelievably ugly into next week. But if you look at, let's see, is this the percent? Yeah, I guess it's percent range. So if you look at this, right, we can see that since, we need to change this to the 5, sorry. I don't know why it's on 15. So if we go here, we can see that since this started, we have continued to hit higher lows. And you can see that by this very, very subtly sloping line here. Notice that we have been hitting higher lows here. And this is incredibly important because you literally sometimes have to go and look, you know, sometimes it can be a difference of 0.3 between the values. So this is what I'm going to be watching into next week to see if this Williams percent range holds a higher low here. If it does, that is going to be very interesting into the week ahead from next week. But remember, there's earnings next week. But just based on some of the action I've seen on GE, you do have some interesting I was going to say shenanigans going on, but that's pretty much what's going on. You've got some really weird price action. Can this easily break down through this trend line? Absolutely. I mean, this is pretty much your make or break area. If we do not hold this support line, this thing is bye-bye. So, we'll just have to see what happens. If we look at some of the other ones like Delta and some of the airlines, they look very similar. Remember last week I was talking about that thruster wick. That did not go according to plan, but notice that this was a red candle. If we go to SDC, which had a green candle and almost the same exact setup, notice what we had on SDC. We had this quote-unquote thruster candle. You've got kind of your thrusters boosting, and you've got your spaceship, if you want to call that, kind of moving to the upside. And then we've got that continuation here. So this was a cool case study to look and see the difference between this kind of candle forming with a bullish hollow candle versus on Delta, we had the red candle setup and we had the rejection. So literally almost the same exact setup on both candles. Notice this one failed and SDC did not. So the market is not just about technicals right now. You do have to play the ones that have some strength and that people actually are interested in. So we'll see what happens next week. But if we were to look at SDC into next week, look at where all the volume's holding. Just like we just showed in GE. Most people have capitulated since this point, and everybody's holding in this lower area. So supply and demand. As people stop selling and demand either remains constant or demand starts to outpace supply, you've got these moves up. And let's say that we go back all the way to the IPO and start the volume by price from the IPO, you'll see that there are still a lot of shares holding in the $8 area, and we are starting to get in quite a volume gap zone here. So remember, the volume gap is simply when there's just not a lot of shares traded above. You don't have a lot of friction until you hit this big zone around $8.30, which would be our supply zone. Remember, all of these shares right now are holding at a loss. So as the price gets back to this general area, people are going to start breaking even. They're going to say, I'm getting out of this. I'm back to break even. I just want my money back. And that's when you get your imbalance of supply and demand, which causes short-term resistance a lot of the time. Doesn't have to, but that's the theory in which it works. So the last thing I want to show is the raindrop chart on SPY. We can see here that clearly on Friday, if we go to the raindrop, there was volume kind of backing price above the line. You can see during the second half of the day here that almost all of that volume was above the resistance line. So clearly there was volume above this trend line. That's something that was different from the previous test of breaking out. Notice that there was no volume above this line. So this is definitely something to keep in mind into next week. Hopefully this video helped you guys understand the platform a little better. Remember, we have our huge event tomorrow, Lessons from Volatility Masters. We have 8 different presenters. This starts at 10 a.m. Eastern, and it will be on our YouTube channel streamed live. So make sure to check it out. Remember, if you do want to set up a TrendSpider account, we have the giveaway going away right now. If you go to just our page, you'll be able to go to the pinned tweet and check out how you can start your free account. Post a chart with the hashtag #StayHomeAndTrade, and you'll enter the chance to win a possible annual account by entering. So make sure to check that out. Thank you guys so much for watching this video. I hope it helped, and we'll see you tomorrow.